Thanks for joining me in this one. In this particular video, I'll be talking about the Southwest Q1 earnings report and my thoughts about the stocks going forward. If you're new to my channel, my name is Stephen Ojan. On this channel, we'll talk about aviation and finance. If you're interested in any of those, I would urge that you subscribe to the channel so that you don't miss valuable information that I try to share. And of course, if you find value in this video, please don't forget to drop a like on this video. Feel free to share your thoughts as well, as I would like to know what you think about this airline and what you think about the stocks going forward. There's a lot to cover, but my goal is to try to present this in less than 10 minutes. One thing I'd like to say right away is that, of course, the airline lost a lot of money, about $1 billion. However, they were saved by the government due to these payroll support programs and the funds that were provided by the federal government to them. And at the end of the day, including those funds, the net income was around $119 million. This is a good thing because it turned out to be a profitable one for them. But like I said, this is all due to the government funds in these numbers. One of the things that I like about, from what they said, is their plans going forward. We know that the airlines are gradually recovering, people are gradually flying again, the numbers are increasing, their load factor is increasing. And by the way, load factor is just the capacity of flying per airplane, all right? So as of January, their load factor was about 50%, 53% to be precise. Into February, it turned out to be about 60-something percent, and then going into March, it was about 73%. So the numbers are gradually increasing, and looking forward, they are predicting that the numbers should continue to increase towards 70s and 80s. The only issue right now is that a lot of business travelers or their business customers are yet to come back, okay? Because a lot of businesses are still not bringing employees in physically due to social distancing and the restrictions that they have in place. The other thing that they also mentioned is their plans to upgrade their fleet. If you've been on my channel for a while, you know that I talk about their plans to modernize their fleet by buying more of 737 MAX -7 and -8. Right now, they've actually had a deal with Boeing to implement those numbers, and according to my last video, if you check that video out, I think I'll link it up above. Boeing will be supplying them with about 100 airplanes in the next 2 years or so, and also for the next 15 years they plan to retire their 737-7s and replace them with the 737 MAX -7s and 8. So they have a very good structure plan in place. And this would lead me to my next point, which is the fuel management, or how they've managed their fuel expenses during this time. Of course, we know that they packed a lot of airplanes, and right now they have about 32 airplanes on ground, 737 MAX, that are yet to return to service. In total, they have about 64 airplanes or 737 MAX, but right now they still have about 32 airplanes that are grounded. This is due to a different problem that they found on a series of the 737 MAX airplane, and Boeing and FAA are gradually working together to fix this issue. I believe it's an electrical issue. According to what it said, it's not a big deal and it should be rectified soon. Now, this leads me to the next point about their LEAP engines and their agreements with General Electric. If you're new on my channel, again, I share a lot of this information on my channel, and I would urge that, don't forget to just subscribe. But the point is this agreement with General Electric to supply them with LEAP engines will help the airline to obviously structure its cost and manage its expenses. Also, one of the benefits of LEAP engine is the dispatch reliability of those engines. Now, I would like to explain something about this dispatch reliability of an airplane, because it really comes to the maintenance and the design of that airplane. Give you a good example. You have two tail lights for a reason on your car. Well, assuming you drive. Now, if one tail light goes out, there's another one to still act as a backup. Of course, you're required to fix the other one that is broken. But you can still drive the car, probably to a place where it can be fixed or things of that nature. Same thing kind of goes with airplanes as well. If you think about this, if something breaks, you always want to have a backup on that airplane that would still get it to function, preferably on a revenue flight. And if that thing is so severe that it's required to have two, then in that case, that plane should still be able to fly to a place where it can be repaired. On one hand, some airplanes have very poor dispatch reliability. If that component fails and there's no backup to it, well, that airplane is grounded there, which means that maintenance will have to be flown in to repair this airplane at that station. And this really adds on to the cost of maintaining fleet and overall revenue is decreased because of this type of expenses. But with an airplane that has a very good dispatch reliability, this means that this airplane will be able to fly to a place where repairs can be made, preferably at a cheaper rate, because you have your own airline maintenance at that facility. I won't be going too much into that, but let's get to the point. The next point that I would like to mention is this, okay? Southwest Airlines is one of the best airlines out there. I have to say it clearly, because first of all, they didn't have any involuntary furloughs, they didn't have to lay off any employees, and they didn't have to cut employees' pay in order to remain in a stable condition. And this is one of the greatest benefits of being an employee at Southwest Airlines. Now, they are planning to bring back all these employees in phases, but right now I believe they have about 70% or so, close to that number of their employees that are on ground and working, but they're planning to bring back the rest towards the middle of the year. All right, the next thing also about the fuel that I would like to mention is the fuel hedging plans. Now, this is a very important thing because as we know that fuel is gradually increasing over time, this will be maintained in a controlled manner by fuel hedging contracts that the airline do have with their fuel providers. All airlines do this, to be honest, but I believe by them mentioning this, it brings this to light to investors to know that the airlines are working against the fuel increase that we are seeing. So that is really the summary of the earnings report. Of course, there's more to it, there's more numbers in there, but I won't be going over all of that in this video because it's just going to get too long. But the other thing I would like to also say is that the good thing, numbers of the leisure travelers are increasing, load factors increasing, revenue is gradually increasing, and they are projecting that things are turning better. In fact, they are saying that they should start to break even by April or May of this year, and that is a good thing. One last thing I'd like to mention is the ability for all airlines to recover and transportation to get back to where it should be is this vaccine program that is being administered to everybody for free. If you haven't gotten your vaccine, please go ahead and do that. As you can see, I have mine here. That's the sticker. I just got my vaccine. I'm sure that kind of hurts, but I'm still feeling good for now. I just got it today, by the way. I'm still feeling good. And I just want to share my thoughts, about this airline with you and what the performances are. Before I go, I just want to mention something about the stock performance. It has taken a dip. The reason why this has happened is the corporate tax plan that the president is planning to impose. Of course, we don't know how this is going to go yet, but this will all affect the market, and the market might end up turning red. The highest price it got to, Southwest Airlines stock, got to around $63.44. And in the recent time, it's gotten to about $65. The price target that some analysts gave is about $65 to $67, somewhere in that range. In my opinion, Southwest is at it's back to where it used to be in terms of price. Of course, it could take a dip right now because of these corporate tax plans that the government is trying to impose. We don't know how that will go yet. I'll keep you guys informed. If you want to see more of these videos, give it a like, and also don't forget to subscribe. I'll see you